So Tesla missed expectations, but did it really? Did it? Check this out. This is from a year ago, and this is the consensus from a year ago. 1.31 million deliveries. And the actual deliveries you can see are actually about 3,000 higher than the expectations from a year ago for 2022. Of course, when we look at the deliveries of the fourth quarter and then we compare those with the compiled consensus of 418,000, that is a miss of about 3%. And short term, because it is a miss, I will be surprised if Tesla stock does not go down. However, it is very easy to forget. If we just look back a little bit more, it is so easy to forget that we did have years before where we did not even grow at a 40% rate in 1 year. So for example, you look at 2020 right here, we only grew 36% year over year. That's not even 40%. Now, we did make up the next year with absolutely crazy growth of 87%. Could it be that in 2023, Tesla will grow significantly over 50%? Well, we'll see. Also, so many people are forgetting. We're not looking at the years before as well. From 2016 to 2017, Tesla only grew at about 36%. That is less than 40%, which is what we had this year. This is not really a big deal to have a year like this, especially when a year before we grew by a ridiculous amount, way over 50% in one single year. So for example, if we take the deliveries from 2013 and we just assume that every single year we are going to grow by 50%, then in 2014 we should have had 33,500 deliveries. Well, we were a few thousand off. And then next year, yeah, we were right there at about 50,000 deliveries. Next year, pretty dead on. Next year, well, now we are behind a little bit. And then Tesla was way ahead. And then Tesla was still way ahead. And then Tesla was still way ahead. And then after that, Tesla still way ahead. And then Tesla still way ahead. Or if you think that taking 2013 numbers and growing 50% year over year from such small numbers is too easy, well, then let's start with 2018. I didn't pick 2017 because we just had a crazy doubling, so I'm just trying to make it a little bit harder for Tesla here. So what happens then? In 2019, we would have had 368,000, so that was a slight, tiny miss based on that. And then in 2020, now Tesla is significantly behind, but then a year after that, boom, we are now ahead. And then now we are still actually ahead. If you are a trader, of course, you want to look at deliveries each quarter. But if you are a long-term investor, all you want to look at is how is the trend generally looking like. But when we just had a crazy record year like this a year before, looking at this chart here, you probably can expect that this year would be a little bit slower. And here is a drive of 52 minutes without any takeovers. The main reason why I did not sell Tesla stock about a year ago when it was at all-time highs, when Elon started selling, is because I believe long-term in full self-driving. If you do believe in full self-driving, then it doesn't really matter how deliveries exactly look year over year. Now, if you don't believe in full self-driving, then yeah, you definitely want to pay very close attention to deliveries. And if you don't like what you see, well, then consider maybe doing something with your Tesla stock. I myself, I'm keeping all of my Tesla stock and I am actually buying more. But even if I did not believe in full self-driving, At current prices, Tesla stock is looking pretty good to me. You can see from 2020, we averaged 62% annual growth rate. So I would say, let's see what this and next year brings to us, because remember, we are going to have Cybertruck now, and then we will have the compact as well. I expect deliveries to really start to ramp up with the compact. Because of time zone differences, you could actually have traded Tesla already in Europe, and it closed 2% higher than Tesla closed on the 30th of December. So there's good thing is, if you don't like these fluctuations, there is some good built into Tesla stock, but let's see how much of that is going to get erased because of this delivery miss. Now let's talk about what in the world happened and how come Tesla missed expectations. Well, Tesla missed its own target for this quarter really badly. Tesla's target for production was 50%, and this still beat expectations by a little bit for this quarter, just by a tiny little bit. Now, when it comes to deliveries, it was supposed to be just under 50%. If you ask me, what is under 50%? The lowest number that I would be okay with is 45%. And really, I would say most likely just under 50% is 49%, maybe 48%. Lower than 47%. That's a little bit more than just under 50% is what I start thinking. Certainly, 40% is not just under 50%. So that, in my view, is a big miss for Tesla itself. Let's take a look at Tesla's own explanation. What happened? On the Q3 earnings call, we have been told by Tesla this: we have begun to smooth the regional builds throughout the quarter to reduce our peak needs for outbound logistics. This means that you should expect a gap between production and deliveries in Q4. This was from the CFO of Tesla. And in the press release released today, this is also what we are seeing as well. We continue to transition towards a more even regional mix of vehicle builds, which again led to a further increase in cars in transit at the end of the quarter. Now, do I believe that this is the only thing that led to Tesla missing its own target? No. So we finished the quarter with 71,000 vehicles in inventory. We have 7,000 exports that just departed from China. So these, yeah, sure. Then 36,000 in transit in Europe, meaning they already have buyers and they will be delivered in this quarter now. That's okay. I'm still on the same page with Tesla here. Now, right here, 2,500 unsold Model S's and X's in North America. It's a small number. So, okay, not a big deal really. And we have just started exporting those to Europe and China. So these will be taken care of. No problem. And then 25,500 unsold Model 3s and Ys in China specifically. You add these 25,000 vehicles and we get 430,000 deliveries. This would have blown out every single estimate, including Troy's. This right here is the problem. Also keep in mind that this happened even though Tesla suspended production at the Shanghai plant. We don't know the reason for that yet, but even with reduced production, Tesla still ended up with some inventory in China. COVID, of course, was a part of why. I mean, you see that bed was in the hallway of a hospital. Everyone is sick in China with this virus. So that certainly had an impact. If that did not happen, we would have had a better situation. I mean, how can you really predict that exactly? this quarter we will have an issue with a virus and this other quarter we will not. That is an issue. Also, Tesla probably thought that the discount offered in China would have had a bigger effect and would have generated more orders. So in China, Tesla needs to either cut prices or start some marketing, or ideally, get the compact out. BYD has no problem selling battery electric vehicles in China, but BYD sells cheap cars, which Tesla right now does not. And I have been very consistent with this, saying that Tesla does need the compact in China, and I assume that they are working on it. If they are not, then I assume they are upgrading their production lines so that they can decrease prices substantially in China. Now, the good news about this is that once this virus goes away, which it will, now that everyone is sick with it, give it a few more weeks and things will come back to normal. And then we will see demand come back to normal levels, and then it will be a true test for demand for Tesla in China for the Model 3 and Model Y at current prices. As a long-term investor, I am very bullish on Tesla long-term, and these are 48 reasons why I only own Tesla stock in my stock portfolio. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.